Good morning. I'm here to present to you with a quick update of the trades and how to align ourselves. I've said that in this business, we have to be very, very, very alert and observant to be able to spot what the market or price is trying to print. You can't get fixated and think that, okay, the market is going to do you a favor, but your ability to see is the key. You don't get fixated also in a direction. You have to look at the possibility of both sides, and when one side is becoming more likely to be what to expect. So we have to spot this, okay? We have to spot this because you don't want to lose and you don't want to be running your account in the opposing direction, even though momentarily we don't want to do that. Now, we want to swing lower against this as an A, B, and a C. We want to swing lower. We are taught that this is a five-wave structure, and rightfully it looks so as a five-wave structure, and that this is just a 2 or a B. You can say this is an A or a B or a 1 and a 2 for more downside. Again, we have to also be aware that what we are calling for more downside may decide not to go downside for now, may decide to push more upwards before going downside. Now, looking at this, we are going to look at, we have been dwelling more on the scenario of us coming to the downside. But now the market has given us a 50-50, and we have to discuss this 50-50. And I want us to look at this. We've said much about this being an A, B, C, or B, and a C, and the first move to the downside. This is corrective, there's no doubt about that. And this, we thought, is going to maintain the momentum to go down. But now, this is looking like we're going to break this top. And in breaking this top, we don't want to break this top. If we should break this top, then it's something else. We can break this top. It's looking like we are going to break this top, but without breaking this top now. So we are looking at a scenario where we had an A, then A, B, C, or B before C. So it may mean that here we've had an A to the upside, and this in the middle might give us an A, B, C, or B in the lower time frame in the middle, and might be seeing a push to the upside to finish a C leg. That is what I'm looking at. So this might just be an A B, and that we're going to do a C leg. Without breaking this top now. We're going to look inward to see what we are seeing. Because this also is giving us a configuration of probably a zigzag. So let's look at the daily time frame. Now, this is where it became, conflicting. And price is giving us a 50-50 situation. If I go to the weekly, last week when an inside bar formed, this was an inside bar. And inside bar came up collectively. We thought that we are going to fall, probably just go a bit upwards and fall. And we didn't want to take this level at all. And I said, if we take this level, then the price is telling us that there is a tendency for me to push more upwards. So the price had broken this point now. So this point has become a point of consolidation and more correction for more upside, in my opinion. That is what I can see now. So price wants to go up to finish one more leg without breaking this top before coming down. Breaking this top is another thing entirely. But for now, we should contend with what? An 100% extension to the upside, not more than 161.8. That is what I can see. So these are taking this point. Price had no business if price indeed wanted to come to the downside. So taking the all of this means we are going up. That's the first thing that makes it likely that we are going up. Then, now coming back to it, so we have seen it broken here around this area, that we have broken this area of resistance slightly. And of course, forget and ignore when you are in a consolidation, whatever the daily candle is giving you, you can forget it. We can say this is a more of a bullish. This one appeared yesterday. Whatever gain that we had yesterday, day before yesterday, to the downside, and thinking that we are likely going to go to the downside, and the next day this one formed, means there is a consolidation and correction. We are in a corrective mood here. And what is going to happen is that we are likely going to push to the upside. So if we have a downward movement now, what you should do if you are selling or thinking that the dollar is weak is just to get out of probably around this area, get out before we swing back up to break the top. And you can look for a buy on US dollar index. That's what I can say now. And you may not agree with me, but that is what I can see. And I'm going to still break it more down to you for you. And so we see this as the A move here, and we see this as a B move now, that we're going to go up and do at least an 100% extension to the upside. But that is not our call for now. We are not looking at this as, A, B, and a C, but we are looking at what ABC will give us at this point, seeing this as what? As an A and a B and a C. So A, B, C of that will still give us an A, B, C of that. So if I go inside of a 1 hour time frame, 4 hour time frame, what I've said is that we are looking at this as an A, B, C to the upside. And that's what I've said. We're looking at that as an A, B, C to the upside. And I said it may just be an A, B, sorry, it might just be an A, B, C, again, up to the upside. We look at this A, B, C on that time frame. We can say this an A, B, C on a larger time frame. You got that all right? Let me zoom in for you to understand what I'm trying to say. This is a top that we don't want to break ultimately, but we are destined to take this top now. So this is an A, sorry, this is an A in this regard of a movement, A, B, and a C to the upside. And we're going to now look at that as an A, B, C of a movement, but it might not actually play well with that, because this is a move and this is a correction. So this is a correction, so it might not play well. But let's see. I'm more concerned in an ABC here, and why I think is an ABC in that area. Sorry, I didn't mean to bring that out. Let's go inside of a 1 hour. And that is where I'm going to show you something. When we had this big move yesterday, and we thought that, okay, this is an AWXY. This slightly pushed beyond a 161.8, which was really highly suggestive of what price may want to do. And we had a decent push to the downside in 5 ways format: 1, 2, a 3, a 4, a 5, a 4, a 5 here. We had that move. And after this move, for us to have had this also more or less in a 3-way format, this one came down in just a wave, a 5-wave structure, and this one went up in a 3-wave format. We are taught that it's a too deep correction, and if we are to fall, really, we shouldn't have even gone up like this, because these had gone up by taking up, I think, about 85.6 or so, or rather, because this is the first part of the move, A, B, and this C, it's like it's doing 5 waves. Let me bring out my drawing so that now. We are taught that we're not going to break this resistance, and we broke it. Tells you that this is a more of a bullish market now. This is more of a bullish market now. So we couldn't probably had our gain to trust more down. The only thing that will make me believe that we are going down again is when we break this bottom. Otherwise, this thing is going up to give us an A, B, and a C. And we know that a B can be anything. B can be anything. B can be anything. So if we are doing a B in the middle, and this B in the middle, this may have formed the end of a B, you must know that. Or it could just still give us A of a B, B of a B, and a C of a B before we go to the upside. So what I'm trying to say now is, if this is an A of a B and a B of a B, this is your opportunity to get out of this trade. And because it's going to push up, it's your opportunity to get out of this trade, because the price later is going to push up. That is what I can see. You don't gain this much of the downside and lose it. And if it's a 2, because everything that you've learned, in the Elliott's structure wave, you must use it. You must use it. We didn't have to erase the primary 2 here. If we really wanted, we didn't have to erase this primary 2 if we had wanted to go down. So that's the first sign. This primary 2 has been, compromised. And that's the first sign, and looking at where it came, from here, that's the move, which we thought, oh, we are. So it came there and it recovered. I'm just teaching you because you have to know these things. It recovered over 85. It even touched 90 here. That tells you this is bullish. This is bullish. Even though they have not broken this point, it is bullish. This is not a correction of 2. So there is a tendency to go up. That's the first sign. And when you now even consider this, eventually when it turned to the downside, and it didn't correct shallow to pull down. And look at this also to the upside. This also to the upside, had gone beyond 78. Yeah, we saw it bouncing off 85. So bouncing off 85, even if this would do a zigzag to the downside and still break this bottom, I will be looking for, a buy to go to the upside. So, in this kind of, you don't just pick trade in the middle when it's giving you this. You have to look for the last correction if you're able to get it. For instance, if this is the last correction here, I will only know that this is done as an A, B, C, in that regard. Let's see. Also looking at this as an possible ABC in the way a manner it's corrected to the upside. You can see that it broke also 161.8 slightly. You may say it's imperfect, but this thing is coming down. That's what I can see. This thing is coming down. So it's coming down. We add reaction here. It's coming down. It broke 161.8. There is a tendency. There is a tendency for, there's a tendency to go up. This to the upside broke 161.8, broke 161.8, broke 85, even reacted at 90. This also at 85, broke 161.8 of this extension. It's sign. So we may see this as a consolidation move for now as a B. B is forming. It may be A or B, B or B, and a C or B, the last leg that will come down before we break the top. So it's an opportunity. That's what I can see here. And going inside on a 15 minutes time frame to look at this. So like I said, we saw this as an A and a B, and this is 5-wave structure to the upside, 5-wave structure to the upside. So this is 5-wave structure to the upside. And what I want to see is that we breaking okay. So of this last wave, this is A and this is B, and this is a C wave. Of this C wave, we want to, and this is the wave 2 of it. This is wave 2 of that C wave. For us to know that we are done and we are now correcting the last leg, and where you should find your exit if you are selling and look for your entry if you are going to buy, is after we are broken this 38.2 level. We need to now break that to the downside. The moment we break that to the downside, I'm looking for where to relinquish my sell. So that is what I can see. Now, if we now go to, let's look at DXY also. It's the same thing. It's the same thing that we're going to see. Let's look at DXY. Now, maybe DXY is helping us to see sign. And because DXY is really manipulated by the broker, really manipulated. Remember the video I did yesterday when we had this push, and I said they threw a sharp wick to this point to get everybody out. So of course people trade DXY, and when they trade DXY like that, of course it's a loss. Anyhow you want to look at it, it's a loss. They threw that wick deliberately by the broker and to eat everybody out. Anyhow, it's like you're not going to make profit here until we decide that we want to move. So where is the wick again? It has disappeared. The wick has disappeared, and also it gave a warning. If you were able to pick it in the middle of the night, it gave a warning that they might likely take this thing back up. Look at this one also. Immediately price did this, we expect it to break 4 and correct. But of course, because it's been manipulated, they broke it down, and I won't be surprised if in another 24 hours, this also will disappear. This had disappeared. This also, I will expect that in another 24 hours, it will disappear. What we saw here on a 1 minute time frame, even on a 5 minutes time frame, let me see if you can still, if you can see something like that, it has completely been eroded. This also is going to go, you won't see it. But of course, if you're able to pick it, it's a warning sign. Yes. Can you see? It was around this area we saw that flash, bam, to the upside. Because it was manipulated, they have eroded it. You won't know why you lost money. The same thing happened here, which tells me that there's a tendency for this also to come down and take the low. Maybe they are not ready to do that now. We are going to continue to watch. So that's just added advantage they can see on a DXY that we're not able to see on all others trading instrument. So let me go back to 1 hour. So going back to 1 hour, I would have thought that after we had done this, the price wouldn't correct as deep as we are saying now. And again, we thought that we are not going to have this impulse to the downside, which is a week that they used to take anybody out if you think we are going up. So it's more of consolidation in this area now. So that's why price can, spike up and down. It's more of consolidation just to get you out. So when we are done correcting, then we take a side that we want to do, but there is a bullish tendency now. So the dollar is still stylishly bullish. That is what I can see. So let's go inside. Just like we said, we need not to have broken this if we had wanted to take this as a 1, a 3-1, and a 3-2 to push down. So with this, we are more likely to go up. We want to see what is going to cook here. And once we break, and this is an A, B, C, and so once we break this level, then we are sure that, yes, we are deeply correcting this. We need to take this level out. I believe we are done with this wave. If it's a B wave, I believe we are done with it. If it's a B wave. So what kind of retracement did we get here? Because on the US dollar index, what is 85? This is 89, and this is 90. So if this 90, of course, it can give us a regular flat. Yes, a regular flat, not a running flat, a regular flat. We can get a regular flat, which means it can still break the bottom, and at 100, extension, we are going to push up. So anyhow, we are looking for the likelihood that price is going to break it might break it or not. It might just react as 61.8 and begin to go up again. So, but we should be looking for an exit at 61.8, or you begin to trade your stop loss around that area. We are going to take this out. We're going to take this out. This is done. We're going to take this out, but maybe we should just leave it until it's done. So we are trying to navigate to the downside, and that will be a C wave now. If this is an A wave and this is a B wave, we might get just a C wave, which may break this bottom or not, but after that, we are going up to take the top. That is what I can say. Sorry again for that break in the transmission, the network. Yeah. So because we just have to profit from here now. So we are trying to consolidate, and price is giving us all this. Even if we had wanted to, really come down, we need not to have corrected deep like that. And again, if it means that, oh, this is a correction as because other instrument might just give you around 85, like US dollar index or euro dollar might give you, and you might be thinking that we are coming down. So the kind of correction, the depth of it tells you is a consolidation, and that the price is going to break to the other side. And we're not ready to go down. That is what I can see. Even with what they have done here, it's a clue. We might break the bottom one more time, and after that, we now pick the low of our B. This will be the height of A for now. We might pick the low of a B. So once we break here, then we know that we are done with a B low, and we can now find our 100 extension to the upside or 161.8, not more than that. So we have to wait. So if I want to quickly shift to euro dollar, I'm wasting time, right? So on euro dollar, so what we are seeing here on euro dollar is still same. You are looking for an exit. So that's all. So we are broken this, which means that we are done correcting. That wave is done correcting. So we have had the A, the B part of it, and this is the C part of this wave, which may now mean that this is a B. This may just mean a B, an A, a B, and a C to break the low. But for now, we want to see one more leg. If it's indeed a B wave, we should see a triad. So, and if we are going to see a triad, this might just be A of a B and a B of a B, and the last one, once we begin to break this level of what we think it's the fourth, you know, the limit of the fourth wave of this last C. So once we break it to the upside, then we know that we are done and we are looking for an exit to sell. So the majors are still going to fall. That is what I can see from here. They're going to fall. So with that said, I've come to the end of that. If I go to the, let me go to a place to actually show you ultimately what we are expecting to happen. Ultimately, what we are expecting to happen is this. What we're expecting to happen is this with that correction. So what we are expecting to happen, because if you look at this on euro dollar, this is an ABC. So this ABC, the extension actually is at 161.8 of the C. So is an ABC on euro dollar extension at exactly 161.8, and we had this big move to the upside. So, and this, if this one becomes a C, so it's going to become a zigzag at the end of the day, an A, B, and a zigzag at 100 here. So, which means that we have to see if you're going to get a reaction at 1.079 area. These are 23, 123, 127. Let me zoom in. And so this is 161.8 of the extension. So this may just, price may still just come to the downside without probably taking the low of this move, So, which is the low of this move. We are taught that this is a 1 and a 2, a 3-1, and we thought this is a 3-2, but now this price may be coming to the downside here to form a double bottom before lifting to the upside. It may react at 100 or 123, so but we need to see. But this is what is looking like a zigzag to me. An ABC at 161.8. So, and the only thing that will make me think that, okay, the price is going to be back up, which I doubt. I think we are aiming to break low, is if we take this primary B here, once we break it to the upside, then we are back, we are, you know, good to go back up again. Because this is 85 here. Price may still try to finish this and correct the 1, 2, 3, 4, 5 of the last C and still get to this point or anyhow. So if it's 85, even at 90, if that happens, we are looking at maybe an 100 because it's breaking down now. We're looking at an 100 extension. Even if it's from here, another extension may just come up here without breaking this area. And we maybe going down from there. So let's just watch. Let's just watch. This is a recipe for a downward movement or a strength in the dollar. That is what I can see for now. If you look at US dollar index, US dollar index, so everything is not yet ready to give us the last correction to the downside. I think they still want to finish this properly. Maybe the fourth wave is done, and they are doing the last wave 5 to come down. So we'll see. It's going up. The last C is going up in the 5 wave, which is also right. So in that case, if we break up, we're going to take up this, like on Euro USD, will be at par at 100 or even at 161.8. But on US dollar index, we maybe just running against this high here. And we might just do an 100 extension that will break above this, we'll take above this or around this area before falling. That is what we can probably see. That is what we can probably see. So I think more or less we are going to go up one more time, just on this correction, not really on taking this as an A, B, and a C. That will violate, if we take this as an A, B, and a C, that will violate, that will probably violate this. I see that it's going to violate this. If you take this as an A, B, sorry, if you take this as an A, B, and a C in that time frame, it's going to violate this. That is not what I'm seeing. I'm seeing more of the correction in here as a potentially A, B, and a C, just to go up more deeper before falling. Now on gold, gold is very interesting. Very interesting. Gold is very interesting. So on gold, with what dollar also is showing, we may have finished the 1, 2, 3, 4, 5. This may have finished this move as a 5. So this pushing to the upside, I will safely look for, a pullback in 3 waves for me to look for a sell. And looking for that sell, we want to correct entirely this run from here to here, and we may be coming very close here or around this area, as we've been trying to say for like a week or 2 now. So that is what I can see here, and said be careful if you want to buy it, because that is what I can see. Looking at it on the 1 hour time frame, I'm going to be finishing soon. So this is going up. It's a very sharp move. If you look at, let's see, if you look at the 4 hour candle formation, very sharp move to the downside. So, and this sharp move to the downside is not as if this one is correcting for. No, this is a new move. And when I will now believe that we are going to go for that more upside immediately is when we take this top. But for now, I believe this is the first move to the downside of a 1 of the correction, or let's say an A, and this will be going up as a B for us to fall again. We might be having a more complex correction to eat around this area. So I see price coming down to around 20 or 2000 level, around that area, yeah. So we need to see that 2060, 2020 level. So we need to see that. So for now, what are we seeing in terms of correction? If you're in the buy, you must be thinking of relinquishing your position now, let's look at what the price had done in terms of that correction. So we are seeing this as the first move, an A to the downside after this splash of a move, an A to the downside, a B, and a C. 161.8 is here, but the reaction, occurred just before 161.8. And if we want to take the inner breakdown of this wave C as a 1, a 2, if it's a 3, a 4th should not break here, and it has been broken, taken to the upside now, means that we are correcting to the upside. So you should look for this. The way I manner this is going to correct to the upside and get out and look for yourself. We should be getting more like a 3-wave format to the upside. Let's look at 15 minutes time frame. If you are buying, so look for an exit and be looking for to buy. So we are broken this, and I believe that this may just be an A, a 4, and a 5 here. May just be an A, probably we are doing a B, and look for an exit and get out. So, and after that, without breaking this place, without breaking this point, we should be looking for ourselves. Let me stop there for now. See you during the weekend. Bye.